it's not like 30% of the market weight will go to 20% either. So it's the best place to stay, to have substantial chunk of your money. I think we may have slight dissonance or disagreement today is on tech. Yeah. That our tech shares have got, I think, beaten up a bit unfairly because they're projecting today, say, 10% growth. They are in a cusp of transformation, and there is re-engineering happening there because with the use of AI and tools like that, you won't need those people. So is there a case for margin expansion, which some of the CEOs have alluded to? Now,
ET now is completing 7 years, and I take this opportunity of wishing the channel all the very best going forward and keeping all those fans of theirs who rely on this channel for getting the latest and the most reliable economic news.
I congratulate ET now for completing 7 years. In the last 7 years, the channel has built up a reputation for itself. I wish ET now all the best.
All right, now that's the big market voice. In fact, the two big market voices that you wanted to hear in the morning, and you will keep on hearing them all through the day today. It's the time for the corporate corner, and I think it couldn't have been more fitting than today on our 7th anniversary to get in what has arguably been the stock of maybe the last 1 year, definitely the stock of the last 1 week as well, and on a day when the insurance space is a buzz. I mean, the case for a chat for getting in Sanjiv Bajaj could be multiple. I mean, there could be multiple cases. The way the stock has done in the last 7 years since ETNAV has been in inception, the returns have been humongous. So if you bought in a Bajaj Finserv and just held on to it, you would have made massive amounts of wealth. But there's lots more to talk to him as well, and he joins us, Sanjiv Bajaj joins us live on our anniversary. Sanjiv, so good having you. Thanks so much for taking the time out and joining in on this very special day for ET Now.
Congratulations, and congratulations to all of you on your 7th anniversary, and best wishes for all the future years as well.
Thank you so much, and I'm sure we'll have a lot of more opportunities to interact as well, Sanjiv. But let's talk about today. Did you, we're just trying to establish the kind of wealth creation that has happened in certain companies ever since ET Now has taken birth. Did you, 7 years ago or 8 years ago, ever envisage the kind of growth rates that have happened for the industry that you are in and for your company as well? Or was all of this planned and calculated in your mind?
You know, the broader industry growth rate for financial services as a proxy for GDP growth rate has always been very clear. We can go through a few cycles and a few years which can be slower or otherwise. So that was reasonably clear. The insurance industry, so if you're talking 7 years ago, you're talking of 2009. So the insurance industry was actually in its heady years of very strong growth in those years as well. So yes, there was fairly good idea at an overall industry level that there was a huge opportunity, and there still is going forward. But the fact that each and every of our 3 financial services companies would perform the way they have done, naturally we didn't have that kind of detailed insight. But we did have strong plans.
Okay. Mr. Bajaj, morning. Nikunj Dalmia also joining in. Thank you for joining on this very special day. I want to get into specifics with you, but before I get into specifics, can you just outline the turf for us? Because insurance sector has not seen very strong growth rates in last couple of years. The growth has come back in last 2 quarters, but growth by and large has been uneven. One side we talk about the great insurance, under penetration, and second side is the competitive landscape, which is getting very competitive.
So, Nikunj, you need to separate these things out. As far as the general insurance is concerned, that's actually been growing at 14-15% year on year the last few years, and this is despite some of the discounting that is happening. So it actually means that without those discounts, the top line growth would be even higher. And it's a overall healthy growth for some of us, including Bajaj Allianz over here. As far as the life insurance business is concerned, this has clearly gone through uneven growth. You have seen companies which had exclusive access to their own banker partners continuing to grow. Many others like us that don't have that exclusive access suffered because we didn't have strong banker partners. That is changing now has changed from April, where the regulators allowed banks to have multiple partners. It's also important to see that life insurance outside of the top 30-40 cities very clearly plays also a savings role, because that's the easiest product, long-term product that can reach through agents to policyholders. Now, given what happened in the overall economy the last 3 or 4 years, a lot of the incremental savings went into real assets, went into property, went into gold, and hence the life insurance industry didn't get its share of those assets. Now this is again changing since last year, as we are seeing incrementally more money come into life insurance. And that's why the last 3 or 4 years has seen choppy years for the industry. But if you see from last year for the industry, you're starting to see steady growth. And the huge opportunity going forward still remains. So that's why, as I started off saying also with respect to growth, you can always have a few slow years or uncertain years. But the larger opportunity remains those companies that have clear long-term, sustainable strategic growth plans to grow responsibly, to grow in a profitable manner, and taking care of customer care will do well over the medium to long term. That's my belief.
What's the strategy at Bajaj Finserv for the next 7 years, looking at the big picture? What is the strategy on where you want to take Bajaj Finserv from here?
Our simple one-line strategy is we want to be the best financial services business in India. We know we may not necessarily be the largest, especially in some of our lines like the lending line. It would be silly to even think of that in a 7-year period. But clearly, for each of the product lines, each of the customer segments that we are in, there is no reason why customers should not come to us first. Today, even if I just look at between Bajaj Finance and our 2 insurance companies, we issue either loans or policies between 15 and 17 million a year. That's a huge number by far compared to any of our peers. So there are already a large number of customers coming to us. As we continue to find ways to serve them better than others, to provide innovative, disruptive financial solutions, we hope to increase the stickiness of our relationship with them. And that's all that needs to be done. There's no rocket science over here. You need to be honest, you need to be transparent, you need to keep improving what we are doing day after day. We've been fortunate to build the foundation over the last 7-8 years for our companies to be able to do that. We are starting to see the result in the last few years. At least very clearly in the case of Bajaj Finance and our general insurance, and we'll start to see that in our life insurance company also.
Sanjiv, there is a proposed large merger happening in your industry today. From what we learn, HDFC and Max Life are set to have a board meet and going to announce a merger as well. And typically people say that consolidation only helps the industry, and it is inevitable in the insurance space for sure. I don't want you to, if you can, I just want you to give me your thoughts on this, because it is inevitable, as we all know, but these are 2 large players starting to get together or about to get together.
My general answer here is that there are opportunities to consolidate if that helps build on the business. If that's just building size, then you have to ask yourself what you're paying for how many years of growth. But yes, there are opportunities in the insurance and the banking space. But if that gets stretched to say that the only way to succeed is through consolidation, that is completely wrong. Most consolidations globally across industries either fail or offer very average outcomes, because unless companies completely complement each other, unless your cultures are similar, and unless you are able to clear out in the initial year or two the, I would say, differences between the two companies coming together, this becomes a huge people challenge more than anything else in later years. And there aren't too many global examples or Indian examples of success. It doesn't mean that it cannot be done if done properly. But I would not take that as an automatic guarantee for success. I would actually say that, and we've seen some of the bank consolidations as well, and if you talk to those CEOs, they will tell you that for 3-4 years, there is a huge distraction as well in trying to integrate the two teams together, the products, the IT systems, the business practices, because this is pan-India. So I think there are opportunities clearly. There are significant opportunities in India to continue to grow organically. And when we look out as well, we always try to see that for what we are going to pay, what are we getting? If we are getting a couple of years of growth, doesn't make sense. What will also be interesting here to see, assuming that this news is true and it plays through, is that the two companies have some exclusive banker partnerships, which may not work in a common merged entity. So we'll have to wait and watch and see how much of it is true. But the general, I would say, I would support the fact that there are opportunities, but I would not say that that's the only way to go. We clearly need many more insurance companies. We definitely need many more banks to come in this country if you have to really get the kind of financial penetration that the government has been talking about.
Mr. Bajaj, I've used some of the apps and some of the products of Bajaj Finance. I mean, how you can finance via an app. And I'm also aware of the amount of data mining which you're doing as a firm. So my question to you is that at a time when everything will become digital, and I'm sure digital technologies will be more advent going forward, do you think there could be a huge change in your cost to income ratio, because ultimately your field cost, your sales cost, everything will start contracting?
There's a huge change in the cost to income ratio. There's a huge potential of that. We're already seeing some of it, as you said, through our digital media. And it's not only the front end that works with customers, it's how we do our internal processing. It's the way we use predictive analytics, and we're just starting to do that in the last year or two, so that our call centers, if they're calling existing customers to sell them fresh products, they are far more focused. If we can take our conversion rates up from 8-9% to 15-20% on our calls, it doubles our productivity right there. So technology and digitization is playing a significant role. If you think about it, as I said, we're doing 15-17 million loans and policies a year. Just the ability to end-to-end digitize it. When you look at our consumer products, we're doing almost 5.5 million loans a year. It's a straight-through digital process from the front end to the loan approval and disbursal into the customer's account. The more we do this, and the opportunity clearly exists, there is a huge cost advantage, and there is a big advantage in taking the right product, the right line, the right level of policy to the customer as well, at a manageable risk.
Mr. Bajaj, appreciate your time, and so glad you could join us and make this day rather special for us.
Thank you. Best wishes again.
Thank you very much. And let me just very quickly mark benchmark indices. Markets are off to a decent start, and that's Madhu Sudankela. He's walked into the 18 office and he will be joining us on the set now. And he just signed that signboard with his best wishes. Madhu, fantastic to have you back on 18 now. You've been a great friend of the channel, so really appreciate. And your favorite channel has become a seven-year-old baby now.
Yeah, thanks, Nikunj, for having me. It's really a fantastic occasion for all of you. I must say, like channels like yours have really added value to so many millions of small investors by being transparent, by being proactive, by being informative, by being analytical. And I wish this is just the beginning. As I said, picture abhi baki hai for ET Now as well. And
so why is ET Now your favorite channel?
I think
it's your favorite channel.
It is my favorite channel. Don't put pressure like that. Let me qualify. It is one of my favorite channels.
Thanks,
So You guys have done a fantastic job, I must say, and wish you all the best. I'm sure there's much more excitement which lies ahead of India over the next 5-10 years, and channels like which ET Now, which have really built an intellectual capital over so many years of analysis and of people.